The Dow down more than 700 points. It had been on a steady cascade down pretty much all day for a number of reasons. They include Facebook and technology stocks that have been on the wane given the possibility of new regulation. They include the tariffs that President Trump talked about today to be imposed on Chinese products. They also include interest rates and the Fed decision to raise interest rates. All of that has been weighing on the markets, and as we approach the closing bell at the New York Stock Exchange, there is the obligatory applause, but that applause isn't too happy for people who are investors, because the closing bell is going to signal a day when the stock exchange and the Dow has been off about 3%. Closing bell at the New York Stock Exchange on a day when the Dow has been down more than 700 points, off about 3%, given all of the turmoil and economics. I mean, the economy is certainly good. The fundamentals have been strong, and yet the Dow closed down today somewhere around 700 points. We'll get the final settle number in a little while, but a lot of that has had to do with interest rates. It's had to do with tariffs. It's also had to do with Facebook and technology stocks, which had been on the wane given the possibility of new regulations in the face of the Cambridge Analytica scandal. Sean Cruz is with TD Ameritrade, and he's with us now. Sean, it was not a pretty day at the stock exchange. What do you think's behind it?
Yeah, I think after we heard from the Federal Reserve, the market had time to digest that, and then the focus quickly turned to what was going to be coming out of the administration in terms of trade policy. And it looks like there's just some general concerns with what the response could be, particularly from China. And that's why you're seeing a lot of the industrials, particularly if you think of your Boeings or your Caterpillars, who have a lot of exposure to China. But then you're also seeing some of that show up in tech as well. And tech has been a pretty big driver of some of the moves higher in markets we've seen over the past year. So as you start to see investors assign a little bit more risk to those companies with the China exposure, they're starting to just pull back a little bit and maybe just move some money to the sidelines until we get more certainty of what's going to come out from the U.S. and in what any sort of retaliation might be from our trade partners.
When you talk about tech stocks, does any of that have anything to do with Mark Zuckerberg saying that maybe Facebook should be regulated?
There is something to that, but if you look at where we're seeing a lot of the red in the NASDAQ, you're also seeing that out of the semiconductor sector, and the semiconductors are where you get a lot of that concentration in risk to China. So when we were getting the news out of Facebook, the selling was generally focused towards Facebook, Google, some of the tech companies that are heavily reliant on data for their business. But this looks like a little bit more broad-based, and we're seeing it focused in some of the tech ADRs, and we're also seeing it in the semiconductors.
All right, Sean, very good. Sean Cruz at TD Ameritrade. On a day the Dow Jones Industrial Average closes down more than 720 points, about 3%, as we had heard from the closing bell. It was not going to be a pretty day. And we heard from Sean Cruz the factors involved, technology, broad-based selling on the technology sector, and some big industrials down as well, given their exposure to China, and the tariffs of up to $60 billion annually that President Trump began today. I'm Aaron Katursky. You've been listening to live coverage from ABC News.